Welcome everyone to the CFO Swinger Watch Report technical analysis video for the week of November 18th through 22nd. Now, if you guys want to know the top-down approach to how we generate the following actionable swing trade ideas, make sure you guys read the entire report before you watch this technical analysis video. The research provided in the report is to be applied to the trade so that you can execute without worry as long as you follow the entire 3-point game plan to a T, which is also given to you in detail. With that, let's get into the markets. So the S&P 500 or ticker symbol SPY here has had an amazing euphoric move to the upside and has reached my outrageous whole number target of $600. And the same can be said for ticker symbol SPX or S&P 500 index. But again, we're looking at the S&P 500 ETF or ticker symbol SPY. And so with SPY here, last week we retested this $600 area, and obviously there was a lot of heavy supply since everyone had their sell buttons ready to execute once the price hit exactly at that $600 level. Now the official all-time high price print was $600.17, which was achieved last week. Now, this is the weekly time frame here. The reason why I want to start off with the weekly time frame is that, well, last week, or last Friday specifically, was OPEX. And we see a very big jump in volume. Now, regarding this volume, I want everyone to completely disregard it, all right, because it was OPEX. Now, obviously, we cannot ignore the fact that we had a large pullback from 600, okay? A 12 point plus pullback from last week's all-time high price print is not a small move, right? This is over a 2% move. If it was a 1% move or even less than that, I wouldn't be too worried. But this is a 2% plus move to the downside after reaching a new all-time high price print. So that is what I'm worried about. I expand a bit more on what that means in the CFO Swinger Watch report, so make sure you guys read that first. So with SPY here, the only thing that I'm really watching out for tomorrow especially is a small gap up for a potential intraday oversold bounce. Now, from a longer term perspective, I want to bring out a very popular technical indicator, the MACD, or what people like to call the MACD. So the price has been making higher highs and higher lows. However, MACD has actually been consolidating since earlier this year, around March to April of this year. And ever since then, we've been making lower lows and lower highs. So there is a clear divergence in the MACD, in the overall momentum with the price. And so to me, this is clearly a long-term warning sign that we've been building up this entire year. And so this is something that I'm going to keep an eye out for. It's something that I'm not too concerned because, again, every technical indicator is lagging. And even if it is lagging though, for me, I want to make sure that I'm keeping an eye on all of these indicators that are showing this type of bearish divergence, to be specific, as we're seeing higher highs and higher lows in the overall price trend, while we're seeing the indicators making a complete opposite trend with lower lows and lower highs. Okay, so obviously, I don't think we're going to be seeing a large sell-off anytime soon. The price is still sitting at new all-time highs and sitting at relatively close to the previous highs as well, as seen here in the past couple of weeks. So as long as we're able to continue to ride on top of my weekly 10, this red line, and the weekly 21, this light blue line, SMAs, we should be able to continue to move up higher, or at least minimum, we should be able to continue to move sideways from this point forward after reaching this very critical whole number level of $600. Okay, so again, on a daily time frame now, we have come right back down to the daily 21 SMA and the daily 10 SMA. So that is the major reason why that I want to see a good bounce tomorrow, whether it be overnight or we have a nice opening around, at least 588 or even 590, or at the very least, the highs of last Friday. And then I wouldn't care what happens after that because we need to see some consolidation. And it seems like we're about to see that consolidation because of the fact that the price is now right back in between the daily 10 and the daily 21 SMAs. Now, the daily 10 is still rising and curling up higher while the daily 21 SMA is flatlining. So that's something that I do not want to see because we want to see a strong uptrend. But then again, we're in a pullback, right? We're in a pullback where the price will try to retest with my short-term SMAs like the daily 10 and the daily 21 SMAs. Now, all we need to watch out for this week is whether or not we're going to take out last Friday's lows, which was also last week's lows. And that'll eventually be a breakage of the daily 21 SMA since we did lose the daily 10 last Friday. So as long as we're able to continue to consolidate tightly in between the areas of daily 10 and daily 21 SMAs, we should be able to move sideways and at least uphold this gap up that we saw right after the presidential elections. Okay, so watch out for this gap and watch out for some sideways tight price action this week. Okay, so with that, let's take a look at our only swing trade idea for this week, SQ or block. All right, so it is formerly known as Square, but the company's name changed like Meta or Facebook, so it's now called block. So I want to take a look at this from the weekly time frame because this fintech company has been making some waves fairly recently, along with other of its peers in the fintech sector, or industry. So SQ here has been making this very, very large base. In fact, if we go all the way back to around June 2022, this is a base that has been forming since 2022, and that's over 2 years. Right, it's 2+ years where the price has basically gone nowhere. And this is a huge macro base that extends from $55 all the way up to $90. So again, we have a lower range level of support at $55 and an upper range level of resistance at $90. And during that time, as we're making this very, very textbook macro base, we've also made a very, very large and macro inverted head and shoulders chart pattern, right? So we have the inverted left shoulder, the inverted head, and the inverted right shoulder, right? So these two shoulders are what clearly makes it a very, very nice looking chart pattern here because this right shoulder especially here, we've been able to come out of it very nicely last week, and we saw it with a lot of good volume, and this comes right after this earnings week of 2 weeks ago. So it truly tells you that the price is ready to move out of this base and potentially break over this massive resistance level of $90, right? And again, this $90 level has been forming for over 2+ years. And so once we're able to officially break out of this right shoulder and out of this big macro base, then we should be able to come back to at least minimum the $100 or the century whole number level of 100. Okay, so that is my first initial target for SQ, and I think a lot of people, other traders and investors also have their eye on this 100 level. So Now, from a broader perspective, okay, SQ here, right, has a lot of lagging properties, all right? The overall fintech sector is lagging. And so I wouldn't be surprised if SQ decides to run up and continue to run up this very week, this trading week, without any regard to what the overall markets are doing. In fact, now if you go back to the daily time frame, okay, when the markets have been pulling back, SQ has been doing the complete opposite. In fact, we're making a very nice and tight Momo bull flag, right? So what we're doing is basically waiting for the daily 10 SMA to catch up to the price so that this week, maybe even tomorrow, or maybe even on Tuesday, depending on how we move and how we react to this current Momo bull flag, we should be seeing an official retest of the daily 10 SMA, giving a sign of confirmation for bulls to break out from this Momo bull flag and potentially come back to retest last week's highs of $90 flat and maybe have a chance to break over 90 bucks this very week and potentially peak over it sometime, midweek is what I would ideally say here. So for official entry points, okay, it can be a bit complicated this week because if SQ or the overall fintech group decides to pull back like the markets did last week, we can see SQ coming all the way back down to $80, which again is not that far away, and potentially even retest with the daily 10 SMA. So we can see a coinciding retest of this $80 level, this intraday and daily level of previous resistance of $80. And on top of that, simultaneously retest with the daily 10 SMA, which closed at $79.67 last Friday. Okay, and that will give us an earlier but riskier entry point at $80.20. This is just for confirmation by using these cents here, right? So now, if you don't want to wait, or if you don't want to have a riskier entry point at $80.20, all you need to do is either wait until we make a higher high compared to the previous highs, so last Friday's highs, which will give us an entry point over $85.20, or simply, if you're focusing on the longer term perspective, which I highly recommend you guys to do, focus on an entry point over $90.10. Again, if you want to focus on the longer term perspective, if you go back on the weekly time frame, we have a massive macro base and a massive inverted head and shoulders chart pattern. So again, this is complementing indications from the bullish chart patterns that we see here. And from this longer term perspective, you can see that there's a clear entry point over this whole number level of $90. And if we're able to get over this $90, we can be seeing a very large mean reversion trade to the upside where we can overtake the century level of 100 and potentially, keywords potential, we can see a retest of the weekly 200 SMA, which finally began to curl downward. All right. Okay, so that is it for this video. If this technical analysis video was insightful, make sure you guys leave a like down below. And if you aren't subscribed yet, make sure you guys hit that subscribe button. Now, if you are watching this video when it just became public and you want to watch this video a day earlier when it's private, all you need to do is become a part of the many readers of the CFO Swinger Watch Report and become a member of the private CFO Discord. You can get 50% off for your first 30 days. It's a first come, first serve basis. So all you need to do is DM me on Instagram at charts, charts focus 1 to claim your spot. All right, again, all you need to do is DM me on Instagram at chartsfocus1 to claim your spot. Good luck, and I'll see you all tomorrow morning.